In this video, traders, we'll look at the rounding bottom chart pattern. Stay tuned. Hey guys, warm welcome to rounding bottom chart pattern. You may well have heard of it before. Let's look at what it's all about. Let's look at how it works. Let's look at how perhaps we could implement it even if we are day traders, which perhaps is not so useful for, but how that can be of use for a day trader and obviously swing traders, investors, etc. By the way, if you're subscribed to the channel, appreciate your support and thank you if you're commenting, liking, etc. on all the videos. It's much appreciated. All right, so rounding bottom chart pattern is this. Pretty textbook stuff. You see this on page probably 3 or 4 of your textbook. You've got your double bottom, you've got your head and shoulders, you've got all these things that come under reversals, and this is one of them, guys. It's a rounding bottom chart pattern. There's no real trickery to this. It's pretty much as it says it is. It's just the price has pushed lower and is creating like a rounding bottom and just pushing back up. The idea is, or the thesis of this, is that price has found a floor and it's slowly pushing back up. Now, one thing to say is that this may not be the right chart strategy or setup or pattern for traders who like definitive kind of jerky movement pulses. I have to say that I'm one of them. I quite like those more definitive moves. However, we'll get into that in a second. This is very powerful for those of you who are kind of looking for a potential technical reason to get into something that you've fundamentally been looking at for a long time. So say you've done your fundamental analysis, you've decided that this is a good pattern to trade, good stock to trade. It's been in a downtrend for a long time. It's been beaten up, it's been battered. All of a sudden it starts to kind of form this pattern. Then you may well go as an investor, as a trader, well, okay, fundamentally I've decided that it ticks a box for me. Other reasons it ticks a box. Now I'm seeing some other people starting to step in and some buying stepping in, some sells starting to back off. The supply demand is slowly on the daily time frame, slowly shifting. Then perhaps now I can look to make my investment, look to kind of see that other people have committed a little bit. We're not too late to the party. We're still well and truly at the bottom of a heavy downtrend, but the tide might be turning. We could be in for a couple of earnings cycles of growth, and that would fit in quite nicely. So that's fine. The problem we have as traders, if you're a short-term trader, is number one, where do you take this and where do you put your stop? Very tricky because it's a broader pattern over time that's changing the supply and demand rather than a definitive jerk. We also need to think, okay, if we can't put our stop anywhere, is it even worth taking? And that's a valid point. You know, we're all about risk reward as well. So how we can use this as shorter term traders is using this as a primary filter for perhaps our day trades. So if we are a swing trader and we see this kind of stuff, we can say, all right, well, maybe if we're in a broader bottoming pattern as a swing trader looking for kind of a couple of months worth of move, you might well look for a pullback buy. So as we're coming up here, yes, we're in a rounding bottom pattern, but maybe this here is your pullback buy. Maybe you're buying that on the pullback. Maybe you're dragging a moving average up and saying, okay, as it comes back and tags that moving average, I'm going to buy it because we're in a broader bottoming chart pattern and I'm adding this extra layer of strategy onto that. That's not a bad way of doing it. Similarly for day traders, guys, you might say, okay, I trade a basket of different stocks. So say I trade this and this, or commodities or whatever it may be. When you have a stock or commodity, whatever market you're trading in this broader rounding bottom chart pattern, you very simply just have a bias to the long side. So as it's forming this, and yes, the argument is, well, you're leaving 50% of trades on the table. Okay, in some instances that's true, but aligning yourself with the broader trend and the broader theme often pays much more dividends than trying to be too clever. So, especially if you're trading a basket of stuff rather than just one thing, you could say, right, well, these are in a rounding bottom chart pattern. I'm only going to day trade these from the long side. I'm going to stick to a long side bus. I'm going to use my day trading strategies and all the kind of stuff that I've got that works from a day trading perspective, but I'm adding an extra layer of edge because I've got this rounding chart pattern on a higher time frame, which should The thesis being, give me some pressure, upward pressure to everything anyway, which should add an extra layer of edge, like I say, on top of your existing day trading strategies. All right, guys, so that's the rounding bottom chart pattern. Very simple pattern, but can be used, I think, in a broader sense as well to help you filter, and perhaps if you're an investor, using this in conjunction with something else to help quantify and kind of give you some trade ideas. All right, guys, take care. See you next one. Bye-bye.